Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up, and this wrap-up is for Thursday, and we're now at the 27th of May, 2021, and look at the metals back into the limelight here. The big question for tomorrow is going to be how do they react to the consumer spending? That's going to be a big report. What do they want to do in front of a long holiday weekend? Because while electronic markets are going to be open Sunday night and into Monday morning for Memorial Day, it's generally very thin volume and not a lot going on. But the market still holding up and holding up well. Dollar down a little bit today, but foreign currency slipping back tonight, which tells me the dollar will probably get a little bit of a bid and back up towards that 90 level. The dollar did lose its embedded reading, and what that means is it's generally going to go a bit higher. Will that pressure the metals at all? As we step into the gold and we look at the weekly area chart of closes, you're sitting here over that 18-week moving average of close. You're up for the week, not much at this point. You know, here we are going into Friday's trade already. We're up 1%, but it is a gain. Let's not look a gift horse in the mouth. The market has had a phenomenal stepping ride to the upside. You can see that you've got a pattern of higher lows, higher highs, bullish. Let's put on the moving averages because this is important. The red line is the 18-day moving average of closes. It's crossing over literally right now as I'm talking to you. If I go back to today, it was not there. Notice the difference. And I'm talking the close on Thursday. Friday's trade, which already we're open for, the market's getting that crossover. So you're flirting with getting over there. Other than a real hard break in the market, I don't know that the market wouldn't cross over now. So I think that you're getting another bullish leg. That puts into play the 1915-16 level, 60 level, 1915-60. The upper Bollinger Band resistance is 1927. And notice the market hasn't hit that for a long time. What it's been hitting, and I've been telling traders this that took my enhanced Bollinger Band course, if they are in the morning subscriber video or my full research, that it's been the window envelope the market decided to fight with, and I don't show that here. I show that in my morning subscriber videos. When we come over to the embedded reading, it's fully there. So I think the market is still being bought until you lose the red line closing under 79. It hasn't done that. It's at 86.54. If that happened, then I'd look for price in the 18-day average to make a run at each other. So even with the holiday, this market is still looking good. Possibility of new highs, extremely real. By the way, we had a great webinar today. I appreciate all of you that came, but I'm mad at a lot of you that signed up and took seats from others and didn't come. We have a list of those people. If you make it a habit, we just won't let you sign up for a meeting. It was very good, lively as can be, 20 minutes like I wanted. I made a lot of mistakes in getting templates ready. That'll be fixed by the next one, and we'll be able to cover even more charts. And yes, I intend on holding these minimum one a week, maybe two a week. I'd like to do 2 a week. So be ready for this. It's going to be coming. They will not be recorded for the websites. You either attend or you miss out. It's that simple. Gold-silver ratio, still just drifting sideways, but still favoring the gold market. Anytime the prices are over the red line, it means that you have a bias to the upside, which is higher numbers. Higher numbers mean you have to have more ounces of silver to get that ounce of gold. In the silver market, you'll notice that you fell back again to that key number, the 18-day moving average of closes. The high of today, which is, again, Thursday, was 27.9950. We're back up there right now. Now, if you take that out, you could end up with a buy signal. Why? You could then have higher lows. You already got the higher high over the 18-day average. I think that until you took out 27.57.5, this market's going to look very interesting to the upside suddenly. In the copper market, I'm watching today, I think it was Bloomberg, I'm pretty sure it was, and I'm watching the chairman of Freeport, McMahon, and he is talking about copper. I have not seen a CEO this bullish, talking intelligently about how you cannot get copper. And even with the scrap, what's happening, and you're going to have to go to alternative materials because they don't have enough to keep producing. You're not getting the same grade ore. And they've got reserves galore, but they're not as good as the current reserves. Plus you have the threat of a strike going on again in Chile. You get that all the time. These strikes don't last real long, and the reason is the people there live paycheck to paycheck. It's not a rich nation. But they can go on strike, and when you think they go real quick, I've seen copper strikes that last. It's hard on the people, but it can happen. We'll see what goes there, but that, I think it was him, and he just sounded brilliant, explaining the position of copper, and the market went up, 14 cents. Something's going on there. I looked and I'm not seeing the strikes have set in yet. We'll see. We know that the talks are going on. We know the threats are going on. Maybe I'll wake up in the morning and there's more information. In the platinum, higher high, lower and low. Now, I think platinum and palladium got some bullish news. Ford is opening 2 plants again in Mexico for its cars. Several plants, I understand, in the United States again. They seem to have gotten their supply chains back and caught up with chips. Not for everywhere, but for quite a few of this. It's a lot of plants that you're talking about. Interesting. If they can do it, why can't others? So I'm wondering, and I think that once that happens, catalytic converters, think of that. That's, when you're not manufacturing the numbers you were, you don't have the demand for these metals. You see that come up on live in the palladium, and I was watching that news, and as you can see, this is the close today, up $54, and that is a catalytic converter market. You know that. So interesting what's going on. You pay attention to those type of things. In the dollar index, the market lost its embedded reading. Now, I had been bearish this market when it lost it yesterday and didn't get it back right away. Nah, I'll stay with what I teach. I think there's an excellent chance of price going up to the 18-day average of 90.28 right now. And if that is the case, will that blip, and it's a blip, you're at 89.95, let's call it near 90, is that going to be enough to put a little pressure on the metals just for the short term? It easily could happen. Ethereum, you're staying just oversold in the market in a downtrend. You have to take out 29.43 in order to end this run to the downside. It sort of flattened itself out, but it hasn't formally ended. Now, I, of course, think the first time you hit a Bollinger Band on the bottom or the top side are where pros take money off, unless you, in fact, that's what I think. And then after that, you can get what we call this gorilla glue trade, where the market just locks in every day on that band. You didn't do that. So this is an interesting area where the market can go either way. If it takes out 29.43, it's not necessarily the start of a bull run, but it is a sign the market might want to go back to 32.75 to figure out what to do next. I covered this and a heck of a lot more in our morning subscriber video at 5:40 every morning, and I'm within a minute or two typically of that. I could be recording at 5. I'm up bright and early, but I realize what time people get up. Look at the East Coast, the West Coast times, Chicago times. I want to get this in everybody's hand by about 6:15, 6:20 in the morning, Chicago time. So I record, I render, take my time, have some coffee, and I'm telling you longer term trends, shorter term trends, where I think you should buy, sell. The idea here is pretty simple. You wake up, and you have an idea in the market. You went to bed with one, you're checking the markets at whatever time. What's Ira thinking about the market if this is what I want to do? What's his chart analysis showing? That's the purpose of this. You don't have to follow my recommendations, but it's pretty neat to have a pro that you can bounce chart ideas against and say, I like what he's saying, I don't like what he's saying, it makes sense, I'm going ahead with my trade, I'm not going ahead with my trade. I'll be responsible, the bad guy, if you miss trades, or I'll take the glory if you make the trades and they work. Either way, what's the difference? I cover all these markets in this way, and there's a scroll bar. And when you pull the scroll bar on our website, it lights up in big words, metal markets, energies, wherever you're at. So you can go right there. You don't have to fumble what part of the video is it, because my videos are 20 minutes long. I do 6 a week. That's 24 typically on a business month. And it's $7.95 to give it a try. What do you got to lose? $7.95? What if you get one idea that makes sense? You might hate me because I'll give you an idea that didn't work. I don't know which way. In any case, come on. Go to the website under the word research, give it a try. I'm Ira, you have a good day.